Hello and welcome. You're watching The Market Wrap. I am Agam Vakil. Let's take a look at how markets have fared through the course of the week. And it has been a very interesting week considering we've seen so much volatility in the markets. And we did see, well, weakness too when it comes to the benchmarks. The Nifty came off by around 1.5%. And we did see gains in the likes of Adani Ports, along with Dr. Reddy's. A bulk of these gains for Dr. Reddy's came in because of the developments in America. Z Entertainment, Yes Bank, and IndusInd Bank, among many others, which also advanced in trade. On the losing end, you did have Indiabulls Housing Finance, but what really stands out in the losers list is the IT index, because we did see a handful of IT names come off on the back of the rupee strengthening against the US dollar. Let's take a look at the broader markets too on the NSE 500 front, and well, that's where you will have some larger moves. Indoco Remedies, of course, once again a bulk of these gains coming just today, considering that upper circuit of 20%. You do have a recovery in 8K Mile Software. Of course, this one has been known for governance issues, but it is making some sort of a recovery. Jayaprakash Power Ventures, ITI, along with CG Power, also advancing and making double-digit gains. On the losing end, you do have Jindal Stainless, DCM Shriram. Max India is also declining by around 12%, and Jet Airways, for various reasons, has come off by quite an extent. And while one may argue that we have only seen about 1.5% declines on the benchmark indices, less than 1.5% declines for the broader markets, it may have been an uneventful week. Well, that is not actually true, because right at the beginning of the week, and if we could have the week gone by up next, we did have the RBI board meet. You know, that's where it was perhaps we got some more understanding. We did see the RBI and the government call a truce, and we did have some measures being announced as well. But moving on, we also had Ultratech, which was in focus. This is after the Supreme Court upheld Ultratech's bid for Binani Cement, and once again we did see a lot of activity in the cement sector. Moving on Tuesday, and a lot of weakness in Yes Bank. We have R. Chandrasekhar, yet another personnel from management who's resigned from the Yes Bank board, and that, of course, put in more pressure when it comes to the bank. Moving on to the next one, and coming down to Wednesday, crude hit a one-year low, and we have seen crude come off from the levels of $75 a barrel in the near term to now around $55 a barrel. That, of course, has augured well for a lot of these OMCs. But coming down to the pharma sector too, Dr. Reddy's remains in focus. We did see a lot of strength yesterday, considering the US Appeals Court did allow Dr. Reddy's to sell an opioid addiction drug. So that, of course, has turned out to be a positive. And of course, today we also had crude, which recovered to a certain extent. But the highlight here was that the Indian rupee was strengthened for the 7th straight day. So that, of course, is what hasn't boded well with the Indian IT sector, but otherwise it's turning out to be a good move for those who are importing. That said, we also spoke to Ravi Dharamshi, who says the healthy returns may be some time away. So Ravi Dharamshi, in our special series, Alpha Moguls, said that that doesn't mean that he's asking investors to stay away from the markets just yet, but there is also caution. But this is what he's saying. Listening.
Large part of the drawdown is done, but that doesn't mean that we are going to start having a wealth creation cycle again soon, because there are still some events lined up. And okay, maybe we took care, we are lucky that some of the macros have fallen in place for us. The crude has dropped dramatically, which is leading to stabilization in the rupee and the bond yields. So that is out of the way. Thankfully, that should provide some kind of a flow to the market. At the same time, there is uncertainty on the US-China trade war. There is some uncertainty. Actually, we are globally still in liquidity is still in a receding mode. In that kind of a scenario, we cannot be making a new high. So I would say that going forward for maybe next 6 to 12 months, we are more likely to be on neutral grounds. There will be ups and downs, and we have to take advantage of that volatility rather than a clear trend suggesting that, okay, we are done falling, we'll make a new high. I don't think so. Or we are the top is in place and will fall another 20%. Both the scenarios right now look like an outlier to me.
So on a neutral ground for the next 6 to 12 months, but what about the near term? We are heading into expiry. Let's take a look at the levels that we are moving into. So based on the open interest, and by that I mean maximum open interest, that has shifted from the 10,200 put to 10,500 put. So that's where that will define your support on the lower end. On the higher end, we have seen a lot of accumulation around 10,700, 10,800, even though after today's move we did see 10,700 call take the pole position with the one with the maximum open interest, even more than what we saw in the 11,000 call. It's largely a 200-point range that we're looking at for the Nifty in the near term as we move into expiry the next week. But let's also take a look at the key levels that Brijesh Bhatia is looking at as we move into expiry. This is what he's saying. Listen in.
10,450 would be act as a strong support till the expiry, and I'm expecting markets to trade in a range between 10,500 10,700 on the upside. So this is the range I'm expecting till expiry, and post that we might see volatility coming back again into the market. As if you look at the historic momentum, generally Nifty has a tendency to trade in a range of 10 to 11 trading sessions, and just we are now at around 6 trading sessions. So still, I think 5 trading sessions, markets might consolidate in a range. That's the reason I am looking for a derivatives strangle short strategy, where I will be shorting 10,500 put and 10,700 call simultaneously, which is currently quoting at around 83, 84 rupees. And expecting this strangle short towards 35 levels by expiry. So with the gain of around 48, 50 points, one can keep a stop loss of around 20 to 23 points on the upside, which is 105, and look for this strategy on shorting on this strangle.
So as we move into next week, what are we keeping an eye on besides expiry, the move in crude and in the Indian rupee? Well, on Sunday, we're going to have the verdict on Brexit, and that is going to be an important factor to watch globally. We will have the Brexit vote coming in, and that could have a bearing on European markets, certainly. Moving on, Tuesday, we will also have earnings from Reliance Capital. Again, this is going to be very important considering this is one of the larger ADAG companies. And finally, on Friday, we will have a lot of macro data coming in from India, October fiscal deficit numbers, as well as the third quarter GDP numbers, which could also determine what the RBI policy is going to be as we move into December. But, well, it's not uneventful, and we're going to keep an eye on several of these factors as well as how markets play out. But with that, it's a wrap on the markets this week. But lots more lined up. Stay tuned to Bloomberg Quint, and we will keep bringing you more.